Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon, all. Ira Epstein of Linn & Associates with your financial market update for this Monday, the 18th of September, 2017, about 3:45 p.m. Central Daylight Time. Well, this is about where the stock indices are going to actually finish the day off. We did get hit in the NASDAQ, and that's because Facebook took a hit off of some paid advertising apparently having to do with the campaign for presidency. You'll read about it in the paper a lot better than I can explain it. So the market got hit, but all the other indices up nicely. So still looking pretty good. Gold and silver down fairly hard, and that's not a surprise given the FOMC meeting starts tomorrow, ends on Wednesday with a speech by Ms. Yellen. The market is anticipating that the Fed is going to start the rolling off of assets from the $4.5 trillion balance sheet, maybe getting up to $300 billion in the first year, and then winding the sheet down to somewhere between $2 and $3 billion over the next decade or longer. Remember, this is going to be a very gradual process, not meant to harm the markets, and it'll give the Fed a lot of wiggle room. What if the economies shake out and the Fed needs some area there to play and buy again? Nobody says they can't do it. Will the Fed raise interest rates at the SEP meeting? Well, that's still a highly doubtful situation. I mean, the odds strongly favor no. December, flip a coin. It can go either way. Got a lot of data between now and December as well. So in between, the dollar index got a rally, but did sell off from its highs fairly sharply, as you can see. And we're looking at other currencies that were what we'll call the safe haven fights during the North Korean scare. They're down in the yen, the bonds and the notes are down as well, and the metal's obviously down. So that's what you're looking at right now. Now, when we look at the Dow Jones Industrials on a weekly basis, you can see how this market has gone up. And I don't have tonight's settlement yet in here. It could be closer to $22.99 rather than that 10 higher that I had right there. You can see how we've also gone up on a daily chart from closes. Now, this close was under the ones right back here, and the market is zoomed right to all-time high closes again. And you see that beautifully on this chart. You have a pattern of higher lows, higher highs, bullish. The market's over the 18-week average of closes, bullish. The market today reached up for the upper Bollinger Band, and that's what stopped the rally, and momentum is embedding. So now we're getting to the point where you have, let's call today, both numbers are over 80 on Friday, over 80 on Thursday. You're embedded. So until the red line closes under 80, I think the trade is now going to switch gears and buy breaks rather aggressively. The one thing that's clear is they haven't had a break to buy. The market is just stuck against the upper Bollinger Band. This, when we take a look at the mini S&P 500, embedded reading, making a run for the upper Bollinger Band, that number's 2511. You're at 2506 as a high. You can still move there. Bias up, you're over the 18-day average, trend up. When we come to the NASDAQ, as I said, it got set back today, but it still has an embedded reading. The trend is up. The bias is up. Should it get its feet under it, and this turns out to be not a big event, I'm looking for the upper Bollinger Band. If the other indices don't first roll over, then that might carry this. As it just turns out, this one's the one that got hurt because of that piece of news, and the Russell went up all the way to the upper Bollinger Band and did a good job too. Notice that you're a fully embedded reading. Stock indices are bullish, and here you had a situation where the 18-week got over the 100. You have a bullish crossover in addition. Now, I realize people keep saying we're going to get a correction, this is going to happen, that's going to happen. Okay, they've been left out in the cold. I don't know what else to say. In the VIX, the trend is down. Lower highs, lower lows. 967 could be the target for the lower Bollinger Band. We have an embedded reading. I'm the first to want to point out that tomorrow could be a Tuesday reversal. Often what goes up or down on a Monday can see a Tuesday reversal, but it's just that, a reversal, not a trend change. So keep your eye on that part. In TLT, the popular ETF, you're down into near support zone. 125.73 is the lower Bollinger Band. You got to 125.84, but you're oversold. I think pros are going to be covering now going into the FOMC meeting there. I feel the same thing happened already today in the bonds. The market is oversold. The trend down. It's hitting downside targets right now. 10-year notes. Market just missed hitting the 125.31 level. Look for the pros to be covering shorts. You've come down pretty hard. What's to be gained by just sitting on that if the Fed says something to surprise the market that could be possibly a little bullish, not bearish? The market's acting hawkish. In the dollar index, you went back up, couldn't quite get to the 18-day average of closes, still could. Momentum is flat. You're out of a trend. You got a higher high and a lower low. The bias is down because you're by the 18-day average. Really nothing going on there. In the euro currency, should prices get up and over Friday's high, this market could throw out a buy signal. It's in a bear formation, but it closed so far, since this is developed, over the 18-day average. Take out the highs of Friday, which are 120.46. And what could happen there is you leave a pattern, don't take out this low again, you got a higher high. You got higher lows, higher highs. You might move back to the 121 level. When I look at the dollar, and let's get out of that, we just did that one. Aussie dollar, trend down. Lower highs, lower lows, momentum down. It's putting 78.77 on its radar until you take out this rally high here in the 80.20s. And in the yen, you've now gone from a Bollinger Band high to a Bollinger Band low in no time at all, oversold. I wouldn't be surprised again if you get some money coming off the table in front of the FOMC meeting. Now in the crude oil, it looks like we're going to have an outside day down. Market is trying to do what? Well, it's overbought there. Next day, you're just overbought. You're not embedding. So you got a market that's hit upside targets 2 days ago, stalled out on you, trying to have an outside day down. When you come to the gasoline market, another day where the market makes a higher high but closed lower. Unlike the WTI, you do have a contract here that's got a fully embedded reading. So until the red line closes under 80, I expect to see buying. And by the way, the open interest in the WTI crude is now larger than the Brent. It lost that in about 2014. It's now gained it back because of all the shale production we're doing in the States. In the natural gas, the market's moving up because of what? Heat. We're going to be 90 degrees in Chicago this Wednesday. So the heat is back in full force. It's one of these last gasps at it, but air conditioning is going to come on. What we get here heads out east normally, and that's what you're getting. You're getting that little blast. Also, remember, we've got another hurricane, Maria, out, and it's about to hit the Virgin Islands, parts of the Caribbean. We've got to keep our eye on that. In looking at the Weather Channel, I can't see where they think it's going yet. I see one part where it might swing up the coast. I see another where one model is still pointing it out there. Appears to be just a little too far away for them to know, and it's getting play from Jose that's still out there. It's getting a counter rotation. There's a name they call it. I was looking at it. It's how the two vortexes play. But I'm not a weatherman, so what's the difference? I want to remind you about Modern Trader magazine. Free, 1-year subscription, $79 value. Covers all these stories, and they're pretty interesting. Paper trading options basics, trading bearish shark patterns, social media sentiment, how to play with those in the marketplace. Weather rally premiums, how do you play with those? Then there's something for everybody. Here's a gold play, then they talk about Chipotle, Amazon, other plays in there, retail's revenge if you're an ETF trader. This is not just futures, my friends. It's futures, stocks, derivatives. It all comes together to play, and the articles are phenomenal because they teach. And they do a lot of them with graphics like you see right here. Graphics you can understand. Yeah, I know you'll say it looks complicated. They walk you through point A, B, C, so you start seeing and learning. Isn't that what it's all about, getting an idea? I'm not saying that you'll ever use a shark pattern, but you should know what it is. You might want to know how weather drives grain markets. I think it's fairly important. So we've put this all together, and with it you get daily market focus. Remember, the magazine's once a month. You get it free by calling us, going to our website. If you go to our website, you'll see a carousel of free offers. You can click up here at any point if you're watching me on YouTube, or underneath us it says click here for Ira's free offers. Do so and we'll get this out to you. I'm Ira Epstein. Thanks for watching, and I'll see you all tomorrow.